This is our Forex blog for December 18th, 2012, and this is one of our new tools. I've yet to name it yet, but it is used in our currency meter in this case. There are two levels on this currency meter that's identified. One is the 40 level, which typically when a trend level gets to this level, the trend can continue. It doesn't explode up. Then I have the 80 level on here, which when you see a currency that has that kind of strength, for instance, as I scroll this back in the chart, you can see the euro earlier, and also right here at 11 had incredible strength. And the dollar was weak, the CAD was weak, the yen has been weak. You can see not the same kind of 80 level weakness that the euro has, but these are trends that are very likely to continue. And you can see also that the pound started off very strong here at about 9. There wasn't really any currency super weak except for the yen at 9. And if you look at the pound yen, I'll bring that up. I'm changing my Forex blog because I'm both trading and also leaving a lot of my charts running for testing various automated systems and such, which has led to this new technology. So you can see right at 9 o'clock this thing identified itself very strong, and that trend continued from 136 all the way up to 136.80, which is what I like about this new tool. The sooner you get into trends, a lot of times there's enough momentum to move it along a little bit even if the trend doesn't continue. Let's scroll a little bit further into the future here, and you can see the euro having quite a bit of strength here at 1045 as well. So at 1045, euro yen is definitely one to be considering. And if you look at the chart here, that's right around here. This one also continued on up from that point, another 50 pips. And once you identify a currency, I'm just showcasing a 5-minute chart, but you can go to either a range-based chart, either 3, 4, or 5 pips per bar, or a tick chart. So let's start with a 5 pips per bar range chart. Once you identify a currency, it's super strong and another one super weak. Basically, you can look for patterns like a little rectangle breakout, or what I would prefer, a 3 to 5 bar pullback. As soon as you get one green bar and it goes 1 pip above that bar's high, you get in. You can see 110.11 or 111.10 went up 30 pips from that point. This one right here, you could have made about 18 pips in 30 pips. And of course, with the if you want to use a 50 tick chart, 50T, you can also see that you can kind of find areas on this. And even if you identify this 1045, you might buy this little pop right here, and it goes up. And you always want to put your stop underneath the low, especially with super strong currencies like this. So anytime it goes your way, pulls back, comes up, can't take the high out, you might get out of that trade there, wait for it to break out before you get in again. This is the kind of trade I would be taking because your risking is so little on this kind of thing. On a tick chart, you are risking a lot of times 4 or 5 pips. In this case, you make 12. You bought, and the farther up it goes, the more you want it to pull back. I might have considered getting in right here. I would have got stopped out with a small loss, got back in again here, and then that was one of the bigger trades of the day. And you can see on a tick chart, it really lets you see. You can get in and out frequently if you prefer that style of trading. I'm testing both scalping and intermediate time frame trading methods, so that this is one of my favorite ways of scalping using 50 tick charts. Let's look at, and you can also use, by the way, 2-minute charts. It's very similar. You can see a 2-minute chart in and out. It really lets you see the price momentum. As you scroll back earlier into the day, you can see starting the day off, the Australian was very weak. The CAD was quite strong. And so if you look at this last night at 10 o'clock, the Australian CAD would have been an excellent one to be looking for sells in. Let's take a look at this last night at 10. And notice again, it showed up. It might have been a little bit before 10. You can see it was about 20 minutes before 10 where it started to go red, and it hit a critical level. Actually, 1 bar before. Actually, yeah, I was right on 10. So right at 10 o'clock here, you can see this is a currency is very likely to continue. And even though you missed the beginning of the trend, it did fall another 12 pips right here. Now those times of the day, this is all designed to show you the volatility for that time of the day. So if it's a low volatility time of the day, you can get readings of incredible strength and weakness and only have the trend continue another 5 to 20 pips. During the higher volatility times of the day, when this shows you incredible volatility, it's based on that time of the day's volatility. So let's scroll through the day and look for some other opportunities. You can see the New Zealand also weak. The pound was also strong. So let's take a look at buying the pound New Zealand, which most people probably don't trade. Last night, 10 o'clock, you can see this one pretty much continued on up. But even if you would have just looked for buys right here, you can see it went up about 20-30 pips over the next couple hours. Let's look at the pound Australian. Last night at 10 o'clock, right here, you can see 53.70. It went up about 15 to 20 pips later that night, and that's what I really like about this. I also like this tool because if you just bring up your software, you don't have to leave it running overnight for like some of our multi-time frame comparison tools. And that means that you can just turn your machine on, or whenever you want to, bring up the charts, and you can see what's happening right now and get a feel for the past trend strength. So you can see the New Zealand continued to be weak. The yen is really strong right here at 2. So 2 o'clock, New Zealand yen, pretty decent one to be looking for sells. So here's 2 o'clock, and we're looking for pullback trades as well. Let's go down to a 2-minute chart at 2. You're not always going to get, here's your pullback trade. All right, you can see it continued on down about 10-12 pips. And this is only about a 5 or 6 pullback, so 5 or 6 pip pullback. If you got short here, you had a few pips. And once it broke these highs, I wouldn't be looking for sells in this one anymore. It's not making new lows. So we'll scroll forward into the day, and we're going to try to find, you can see the CAD is showing some strength there. The New Zealand is still weak. Most people don't trade that particular pair. They want to trade the dollar or the yen versus some of the other pairs. Let's sort this so we can see the dollar and yen on the top. So between the two of them right now, the yen is the weakest. We have a very strong pound. So really around 3:30, you can be looking for some pound dollar buys. And the key to trading is obviously small losses, big wins. Let's find this exact time again. You can see the dollar was mildly weak at 3:30. The pound started to go strong. And if you look at the chart, you see this at 62.05. It did go up another 20 pips. And, that's the beauty of this. It catches new trends very fast. It works both live and historically. And you can focus on trading, the best pairs. Now, obviously, the Swiss was one of the strongest ones at that particular time. So the dollar Swiss is an excellent one to be looking for sells at 3:30. Here's 3:30. You can see that this continues on down another 10 pips. And I'm really looking for, depending on the currency's volatility, at least a 10 pip pullback. So from 65, it didn't quite pull back 10 pips, but it did go sideways really close to the 10 pip level. You can see I continued down. I would have probably skipped on this trade here. You got a somewhat decent pullback right here, And you can also see that as the market's going sideways down here at the lows, anytime you get a rectangle pattern with very low volatility, even more predictive than trends is low volatility periods go and turn into high volatility periods. This was a clear trend down. The Swiss was super strong, and when it couldn't get any kind of a pullback up, breaks down the lows right here. You can see beautiful trade down. This is one of those trades that I personally took today, and I just set a stop limit to get into this trade, and then it notified me, and you know, you just want to trail it down. Whether you use our chandelier stop, parabolic stop, or intelligent trailing stops, it doesn't matter. You know, when you have a really strong trend, you can use a 2 times trailing stop, and you can see it does an excellent job of keeping you in this. And the only key to trading is, and the only secret is, small losses, big wins. So our software really helps you focus on the ones that are most likely to give you the big moves. And and this is on a 2-minute chart too, kept you in the whole time. Take a look at the pound yen explosion up earlier. Now, if you really think it's going to go farther, you might want to put a 5-minute bar up here so it keeps a little wider stop. But you can see it caught the majority of it. You bought this little breakout right here. You're out somewhere up here at 75. It caught the majority of those moves, which is so nice. So let's scroll forward and show you this a little bit more example here at 6 o'clock. Extreme weakness in the New Zealand. And the Swiss was consistently strong. The New Zealand Swiss at 6 is a trend that's very likely to continue down. Let's take a look at this. Here's 6 o'clock, and if you notice where that showed up on here, it really never went back above that level. And so at that point on, you're basically looking for pullback trades, and you got 2 nice ones right here and right here. There's not many other pullbacks or sideways rectangle patterns that I see on this chart, but this is a wonderful tool for helping you be in the best trade. And a lot of times you can see the euro is strong. You want to see how it is during the pullback phase. If it's not quite as weak as it was strong before, if the daily, weekly, monthly trend, which is up on the euro, is in the direction of the momentum move, once the weakness kind of fails like this, you can kind of anticipate right here at 9 to be buying the euro. And you would do that against the yen at this case. So 9 o'clock, you're anticipating a euro-yen trade because the yen longer-term trend is down. And here's 9 o'clock. You're anticipating that. I wouldn't have actually bought it right here at 9, but I would, and I did look at this. I didn't catch this particular trade. I got into it a little bit later up here. But this is one that you're kind of looking for a breakout at 9. Let's put this line here horizontal. I have a slight angle to it. There we go. So there's the high. You're looking to get in here at 75. If you really want to avoid a lot of false breakouts, you might want to wait for the bar to close, depending on the time frame. If it's a 5-minute bar, you could get long right there, put your stop right underneath the lows here, and you're risking 10 pips. And you can see even if you just got out right here at 08, you're in at 75. You made about 35 pips while risking 10. And you know that means basically you can be wrong 3 times and right only once and still have a slight profit. You know, you lose 10 pips, 10 pips, 10 pips. That's a 35 pip win. That more than covers the 3 losses with a little bit of left over. And so that's the beauty of this methodology, is that it really finds some explosive trends. And I plan on releasing this probably later in this week. I have to decide what I'm going to call it. I've been trading with it for the last 2 weeks, and I like it better than our last currency meter. It's faster, and it's based on maximum volatility. So anytime you see a reading over 40, the trend's likely to continue. 80 readings are incredible. Now, also keep in mind that this works on both the chart and let me go ahead and add it to this individual chart here itself. I'm also going to add the same technology that only does this currency. It doesn't compare every other one. So anytime you see the trend up, in this case it's less than the 40 level. If you see the actual euro yen itself having a reading higher than what the composite average of all the euro and all yen pairs, that's even a more high probability trade. And I personally look for readings of 2 times this. So that's 28. This is about 55. It's almost twice that reading. This is one of those trends where you can really, when you see this is green and you get a spike on this that's double, you pretty much can buy the breakout of that bar, 5-minute bars high. And so as you can see, you want the currency that you're in to have a stronger reading than the composite of all of them. And as long as that's the case, you can kind of stick with the trade. This is 65, this is around 40. This is the first point where it dipped underneath the composite reading, so you can yank your stop up underneath it. You don't know if it's going to continue or not. Alright, so it's taking off. And you can see the composite score is a little bit higher than this one. So other euro pairs are stronger than the yen, unfortunately at this point. And again, this is a lower value, so you might want to put your stop underneath here. Alright, you're out of that trade. Now, if that's all the pullback it's going to do, and it breaks out again, you can get in. But you want to watch this particular currency compared to the rest of them. What this is telling you is the euro-yen is going sideways, but the other euro pairs are still exploding up, and yen pairs are getting weak. Alright, so you're in this again. You can see this reading is a little bit stronger than the composite. Now it's a little bit less. You know right away that if this trade's not going to work, your stop's right underneath here. I'd move it up a little bit at this point, very close to break-even trade. And now it takes off. And as long as this reading is less than this, you want to tighten your stop up underneath here. And I just want to showcase this in our blogs so that when I release it, people will be able to use it right away and benefit right away like I have been.